and welcome back to our business tips. Today we're going to talk about what to do when your business has tax debt. Now we're talking mostly about tax debt overall, about taxes, but there's also, on top of taxes, there's trust amounts. So a lot of people think GST is a tax amount. It is a tax amount, but it's also a trust amount. And what I mean by that, it's a trust account. GST and payroll are a type of tax debt that you are collecting on behalf of the government to remit to them, which is different than corporate income tax or personal income tax or any of the income tax where you have to earn the income and then you get your net and then you pay it. GST and payroll are different, okay? So now if you owe GST, payroll, corporate tax, whatever it may be, that's what this video is about. One of the biggest mistakes people do is they use their payroll remittances, so they'll take money from their employees and it'll go into their cash flow. Or they collect GST from their clients and it goes into their cash flow. Then when it comes time to pay the GST, or the payroll trust account, they don't have the money to pay it because they used it in their cash flow. It's not what it's meant for. It's actually illegal. Now, at the end of the day, everybody does it, so they're not coming after you specifically other than for the debt. And when it's trust accounts, when it's GST or payroll, they can go after the director of a corporation, not just the corporation itself. Whereas corporate income tax, typically in most circumstances, they will go after the corporation for corporate income taxes. Now, know this, that the CRA will work with you, particularly after COVID, even more so, but they work with you to meet your obligations. So they're not just coming down and say, you owe, pay today, or you're done. You know, they're not like that. Most collection agents. They will deal with you. They'll work with you. They'll try to understand your situation, try to maybe make a payment plan for you, or try to be flexible for you. If you're not good at negotiating, then you might want to hire someone to help you negotiate and get a representative like an accountant or someone who's good negotiating, obviously, with these situations. Or you can negotiate yourself because you're going to negotiate a payment plan in many circumstances if you don't have the money to pay right away. Now, in some negotiations, they may ask for certain things. If you can pay it off in the next few months, not a big deal. But if you start going, well, I'm going to need a year to pay this thing off, they might start asking for bank records, your personal records. They want to know if you can pay this and if you're just squandering the money somewhere else. So it depends on the situation and the negotiation. They may ask for things. But keep in mind that you can always negotiate a payment plan. And in some circumstances, you can file for taxpayer relief. And maybe you have financial hardships, you've gone through bankruptcy, you're going through troubles. There's taxpayer relief in certain situations, particularly for penalty and interest. That's the biggest one. And of course, when it comes down to bankruptcy and consumer proposals, that's another way. But only if you're in trouble, because typically you'd rather pay them if you could. If you have any questions or need help with any of this, we'd love to hear from you. Thanks for being a part of our business tips, and we'll see you in the next video.